Hello, and welcome to Deal Clinic Live. Cannot believe it's actually July. So welcome to this edition of Deal Clinic Live. We have already some live investors with us, so thank you for joining. I've got here Alan, Andy, Angelique, Ed, Fitzroy, Mari, Sarah, Sayamak, I hope I've said your name right, Tarek, Val, and Wendy. Welcome to you all. So this Deal Clinic Live, we have our sourcing agent of the month, Pavan Suman, and he will be going through some juicy deals for you. If you are watching the show on replay and you do have any questions, feel free to message us at admin@sourcinginvestments.co.uk. For those investors that are live with us here now today, thank you for joining. And if you do have any questions, feel free to drop them into the chat box or the Q&A. I will be keeping my eye on those. So some of this will be there will be replay out on Facebook, Instagram, and our YouTube channel. And there will be snippets of it going out to those platforms to help drive people's interest to it as well. So for those of you that have registered and aren't able to watch the live, welcome on the replay. As mentioned, if you do have any questions, feel free to email us at admin@sourcinginvestments.co.uk. As mentioned, the replay and the recording will go on our YouTube channel, which is Sourcing Investments Limited. So I do encourage, as always, interaction because it does help build trust, and you're able to see with those questions actually what is available on the table. We have also with us today a couple of power team members, and I'll be introducing them without further ado. So as mentioned, we have Pavan Suman, and he is our agent of Capital Partner Group. So welcome, Pavan. We also have our power team member, Bruce Mannering of Bond Finance Limited. Welcome, Bruce. And we have our very own Tim Sanders, who is our own investor here on the platform, and he will be representing your voice of investors, but please do still drop your Q&As into the chat box. And then there's myself from Sourcing Investments, Bonnie, as your host. Okay, so thank you, gentlemen, for joining me. Really do appreciate it. We have got some more investors joining live. I will try and do shout outs to you each for those of you that are joining. I'm going to actually talk about Pavan now. Pavan is of Capital Partner Group, and predominantly he actually operates in the West Midlands, but they do acquire a variety of strategies across the UK market. So they predominantly work in West Midlands, but they can source nationwide too. And that varies from things like land, residential, commercial, as well as projects suitable for investment and developments. They are able to access lucrative off-market opportunities in buy-to-let, multi-let, HMO, serviced accommodation, literally you name it, they can get that for you. So what I'm going to do is play a short video with regards to Pavan and what his company, Capital Partner Group, offer, and then I will be handing you over to Pavan. So let me just share my screen, and I will do that for you now.
Over the last 9 years, we have grown our company to have 4 parts, where we source and acquire land, residential, commercial, investment and development properties for ourselves and clients in the UK and overseas. And we also have a construction company where we deliver our projects on time and done at a good standard. And we also have a lettings department where we offer rent guarantees from 3 to 5 years, which makes an in-house property investment company where we deliver a turnkey service for our clients.
Perfect. So Pavan, I will love to hand over to you now, if that's okay.
Yes, thank you.
Bruce, if I could ask you to kindly pop yourself on mute, that would be amazing. And Pavan, I'm here in the background if you need me to. Thank you. Over to you, Pavan.
Thank you. Hi, everyone. Can you see my screen?
Yes, perfect. Thank you.
That's good. Yeah, so I'm Pavan Suman. I'm the director of Capital Partner. I've been doing this for over 9 years now. We've been sourcing and acquiring residential, commercial, investment and development properties for ourselves and behalf of our clients, which are in the UK and overseas. And we also have a construction company and a rent guaranteed company as well. So as I was discussing, these are the 4 pillars to our company, where we source and acquire for ourselves, we project manage as well for our clients, and we have a guaranteed rent company. So I'm just going to go through with you with a couple of cities in the UK, although we source and acquire nationwide. So I'm originally from Birmingham, and this is where we first started investing. So Birmingham is now hosting the Commonwealth Games this year. And, you know, it has a population of 1.1 and it's continuously growing. And it has 4 major train stations, which are going directly into Houston, which takes 1 hour and 21 minutes. Once HS2 will be built in 2035, the average time will be taken, which will be 52 minutes. You have direct trains going to Cardiff and Edinburgh. So, you know, you have trains going nationwide, wherever you want to go. There's 5 major universities as well in Birmingham. And Birmingham is known to be the next London. That's what people are calling Birmingham now. There's a lot of capital appreciation. I bought a property 10 years ago in Birmingham, and the property prices have gone up so much. I remember buying a property for 70, 80k, and now I'm remortgaging my property at £300,000. Birmingham is now Article 4 area. It's a very strong rental demand. There's still not enough houses. We need more houses. So here we have Liverpool and Manchester. Liverpool, Manchester have 4 major football teams, as you may know, of Liverpool, Manchester United, and Everton. It has a population of 5 million. Plus, there's a lot of high cash flow properties, and there's less capital appreciation, but compared to Birmingham, so you can pick up properties in the northwest for around 80, 70k or maybe cheaper. There's very strong rental demand. There's multiple universities, and HS2 will also be completed soon as well. And there's also lots of development taking place. So our team, this is my team. You know, we have a team of solicitors. That's me standing there with my construction team and tradesmen. We also have a team of mortgage brokers, surveyors, and letting agents. And we have guaranteed rent providers covering all over the UK, which is basically a turnkey service for our clients. So I'm just going to show you a short clip of video of one of my projects, which was a commercial to a residential conversion, which was two retail shops into a dwelling. So this project was based in Wolverhampton. As you can see, the 2 retail shops on ground floor. It was a very large end terrace property. Everything was all done back to brick. We had to take a few walls out, put a few steels in. As you can see, a brand new kitchen being put in, flooring. The heating was gas and electric. So this property was bought for £100,000. It was then valued at £160,000, and the rental income of this was £650 per calendar month. So this is our guaranteed rent service that we offer. As you can see, when you go to a letting agency, they charge you the management fees, they charge you the void periods, the maintenance, and then you're left with a net rent income of £301. So when you go with a guaranteed rental company, they don't charge you management fees, they don't charge you void periods, and there's no maintenance fees either. The way you give them the property, they will give you the property back, and you're left with a net rental income of £451, which is what most investors are now doing, because they're seeing the difference between a letting agent and a guaranteed rent company. So this is our timeline. We source and acquire the property for you. We instruct the buyers and sellers solicitors. We arrange someone from our team to go to the property and do a building quote for you. We liaise with the solicitor to ensure a completion on time. And then once the property is completed, we start our building works, and then we let out the property with our guaranteed rental service. Thanks for listening. Has anyone got any questions?
No questions yet about your presentation, Suman, but I'm just going to answer. Alan has got a question with regards to, I am new to the platform. Is there a possibility to advertise outside sites outside of the UK? Alan, we actually focus on the UK market. So anyone from the world, around the globe, and the planet can invest in the UK market. This is what we specialise in. That includes places like the Isle of Man and things like that, but it is the UK. It is UK soil, basically. I hope that answers your question there, Alan. Thank you for that. Okay, Pavan, nothing else come in so far. Just so that answered that. And I think if you can go, I think they're waiting eagerly for the deal presentation, if I'm honest. That would be amazing.
Sure. Shall I go through on the first deal?
Yes, please, Pavan. That'd be brilliant. Thank you.
Great. So this is the platform, guys. As you can see, there's quite a few deals that we have got, which is a mixture of residential, commercial, investment and development properties from 140,000
Pavan,
to...
sorry to interrupt, Pavan. We can't see your landing page. We can still see the presentation.
Oh, okay. Can you hear me clearly?
Yep, can hear you all good. It's just the your landing page.
Okay, can you see it now?
Yes, perfect. Thank you so much.
Oh, okay, I'll start over again. So this is the Source Investment platform, and we have all of our off-market deals. As you can see, there is a mixture of residential, commercial, investment and development properties, all from 140,000 all the way up to £4 million plus. So the first one I'm going to show you is a block of 3 apartments, which is located in South Wales. So this only came on the books 2 days ago, which I thought would be good to show you. So the purchase price is £140,000. As you can see, the gross yield is 8.7%. So the rental income of this is £1,018. So it's a very high cash flowing property, very high yield, and it's 3 separate apartments. So there's one. So as you can see the pictures here, I'll show you. Yeah, there is 2 1-bed apartments and 1 studio apartment. I don't know if you can see the maps, but there is quite a lot of places nearby where you can visit, a lot of amenities, shops, pubs, schools and colleges. So this will be suitable for first-time buyers, families, students, professionals, key workers, socials, and other investors.
Pavan, before you go into the next deal, I have some questions from investors. So investors, apologies because those questions didn't load. So apologies for that. So I'm just going to put your questions to Pavan. Val, Sarah, and Wendy, I'm presuming this was with regards to the presentation before the property. If that's correct, let me know. But I'm going to ask Pavan the questions based on what he showed prior to this property, because I found this before he just went in. So first question I have with regards to your presentation is from Wendy Tang, and she's asked, can you explain what the guaranteed rent service is, please?
So the guaranteed rent service is when a provider takes it. So either professionals take it. So it's all different everywhere based in the UK. So in the West Midlands, sometimes you have hospital staff, which are doctors and nurses, which want to take it on a company let. And sometimes you have the council who want to put in their tenants who are classed as social housing. So it's a mixture of professionals and social housing which take care of these properties.
Perfect, thank you. Wendy, just let me know if that's answered your question, and also if I had aimed it towards the right angle there with the presentation. Thank
Bonnie,
you for
could
that.
I jump in on that one?
Yeah,
to
of
expand
course.
on Wendy's question.
Yes, please.
So obviously you mentioned about guaranteed rent. What are your general client types that you have on your tenants? Are they more professionals or are they on the social housing side? Who do you generally get in?
It all depends on what area it is. Sometimes obviously in the deprived areas, it's normally social housing, but if it's a good area and then it's professionals, or if there's hospitals nearby, then sometimes the doctors and nurses tend to take on these properties.
So is it often then, let's say the companies, let's say a hospital who's got student staff coming into work and learn on their apprenticeships and things, would the hospitals take the sort of guaranteed rent and the hospital would be responsible for paying the landlords rather than the tenants individually then, right?
Yes, so the hospitals are direct with the landlord.
Real. And have you had any, do you know of any issues that your current investors have had with any mortgages with guaranteed rent service?
No.
Awesome, good. Thanks, Bon. That's me.
Perfect. Thank you, Tim. I think you've actually asked Sarah Johnson's question, what are the tenant types? So thank you for that. I've got a question here from Sarah. Please do let me know if that has answered your question. Wendy has said thank you as well, so thank you for that. What are your profits from this? That's a question from Val, and I'm presuming that goes to Val. Please let me know if I've asked this in the right frame, that's with reference to the guaranteed rent. So if you could talk about the profits from that project that you had before, that would be brilliant. Thank you, Pavan.
The commercial to resi.
And where you mentioned, yes, Val has said, yes, it is in reference to the guaranteed rents. The profits from guaranteed rents.
The profits. Shall I go back on my slideshow?
Yes, please do. That's perfect. Thank you.
Yes, so as I laid out the numbers and the details here, as I say, the letting agent, they charge for the management fee, the void periods and the maintenance. And whereas if a guaranteed rent company takes over your property, they don't charge for the management fee, void periods or maintenance, because they literally take care of the void periods and maintenance. The landlord just takes care of, sometimes in the contract, they should take care of the boiler or if there's any structural damage. And the way you hand the keys to them, they should give you the property back to you. So there's no 10% management fee, there's no void person, and there's no management at all that needs to manage these guaranteed rental companies because they're direct with you.
I think the important thing here, Val, is to understand that we can't really give you a profit percentage because it would depend on independently how much the landlord or the investor is paying on the mortgage. Obviously, if they've paid cash, then it would be 100% profit because they would be getting the rent in without having to pay any mortgage. So that really would depend on how much money or how much outgoings you have with regards to your mortgage repayment. Please do let me know if that helps, if that answers your question.
Could I jump on that bit again?
Yes, please do.
So, Pavan, I presume then the way it works, because obviously the numbers on the screen look pretty great for anyone who's looking at them. So the way it's possible to do that is that let's using the hospital as an example, the hospital would be charging the rooms, the apartments out at a higher rate to their nursing staff. And so they're making a bit of profit on the other side, and at the same time keeping your profit higher as well. Is that right in thinking how it works and how it can be so lucrative for both sides?
Yes, I think so. I think that's how it works.
Well, cool. Thanks.
Perfect. Thanks, Tim. Let me just run through these questions. Okay, that's everything. What are the tenant types? I've got a question from Mari here. For guaranteed rent, then, do you sign a rental lease with the corporation and the social housing? And for how long? Mari, by your question, I'm presuming when you say you mean yourself as the investor. Is that correct? If you could just clarify that it's you as the investor that signs the guaranteed rental lease with the corporation and the social housing. Is that the question, please? Pavan, does Pavan
Yes.
sign it? Pavan, do you sign it? If you can just clarify that for Mari.
No, so you are direct with these guaranteed rent companies. We just introduce you. We do our due diligence and we just introduce you to them.
Perfect. Thank you for that. So, Mari, what Pavan is presenting is an opportunity where you would purchase the property, and one of the potential strategies would be the guaranteed rent option. Therefore, when you purchase the property, you then would sign the rental lease with the corporation or the social housing company. Perfect. Thank you. Mari says that she sees. Brilliant. Thank you, Pavan. Great questions, everyone. Thank you so much. Okay, Pavan, if you continue with the first deal, which were the 3 apartments, and then if you finished presenting that, once you finished presenting that, I'd love to go over to Bruce.
Great.
Sorry, but I'm just seeing a quick question from Sarah. Pavan, do you take a fee for the introduction of the deals, and how do things work after the leases end?
So with the guaranteed company lets, I don't take anything from the investor. So once I give it a company let, the company let pays me. So I don't take anything from the investor. As if you go to a letting agent, they normally charge you the first month's rent.
Roger that. So you're making your money from the guaranteed rent company, rather than from the investor, right?
Yes.
Perfect. Thanks.
Okay, brilliant. Thank you for that, Tim. Sorry, Sarah, your question, I missed that. Val has said, would there be a recording of this? Yes, Val, this will be recorded and it will be posted on our YouTube channel, Sourcing Investments Limited. So feel free to watch that replay at your convenience. Thank you. Okay, Pavan, great questions from our investors there. Thank you, Tim. If you could continue with project 1, please.
Great. So now we're going to go over to a mixed use property, which is in the West Midlands.
Sorry, Pavan. Is this project 1? I just wanted to bring in Bruce. Have you finished presenting project 1?
Oh, okay. I've finished property 1. I've just got 2 more properties. Shall I do that at the end?
Yeah, well, I just want to get Bruce's insights on what you presented previously. So I'm just going to introduce Bruce. So Bruce is our expert here with our power team on the platform, and is of Bond Finance Limited, apologies. So Bond Finance Limited is actually a mortgage broker that are completely independent from all lending institutions, and they have access to the whole of the market. Now, they are actually dedicated to finding you the best deals out there. So really, I do encourage our investors that if you have any questions with regards to lending, that Bruce is the person to really ask. They really do focus on strong relationships with key lenders, which gives them access to the highest levels, which really aren't normally available to the rest of the competitors. So Bruce, I'd love to hand over to you, if that's okay.
Lovely, Bonnie. Thank you very much indeed. This presentation here is what I normally do over 45 minutes to an hour time. I'm just going to take little snippets of it, because I believe we've got a lot of overseas investors on your platform. So I'm focusing on that. We do have a large UK client bank, but this presentation is focusing on overseas investors. So about Bond. I started Bond back in 2004, so we've been going for 18 years now. I started it with my business partner, Dan Newbury. And right, come on, slides. There we go. So we are FCA regulated and we're founding members of the NACFB. If your broker doesn't have these two accreditations, I would find a different brokerage because they don't tick all the boxes. All our brokers are CMAP qualified, and I've basically got two different departments. I've got a resi and buy-to-let department, and I've got a commercial department. The reason why I've separated out the company is so my admin staff specialise in these areas. There's no cross-pollination. So they're just focused on their two completely different beasts. This is our setup. So we're a medium-sized firm with me and Dan at the top, line managers being the columns and the brokers in the middle. And we're supported by accountancy and compliance services. We are based in City of London. There's the walkie-talkie just behind me. There's my office, and I also travel back and forth between the City of London and a Brisbane office because we've got lots of clients in Hong Kong, Singapore, Australia, and New Zealand. Generally, if it's an odd month, I'm in the UK. If it's an even month, I'm in Brisbane. Now, very briefly, what are lenders looking for when lending to a foreign national and expat? They're looking for good income, number one. So £50,000 or equivalent. They're also looking for UK landlord experience. And they want some sort of credit profile in the UK. So that's on the lender's wish list if you're an overseas foreign national or expat. Now, the most important one here is the credit profile, because that's what they really are lending off the back of. But most brand new overseas investors don't have that, but we can still help. Generally, the loan to value for your first investment in the UK is capped at 65%. But once you start building up your portfolio, we can then get you up to 75%. Now, that's me finishing for this part of the presentation, and I'll go on to mortgage products a bit later. In question to the deal number one, my comments, Bonnie, are that we've got a £140,000 purchase price here. We have to be careful that the lender we go to, that they don't mind each individual unit being less than £75,000. We have lenders for that. Also, I'll also check that each studio is over 30 square metres. Once again, if it's just below 30 square metres, it reduces who we can go to. But my lender of choice for first-time foreign national would be Hampshire Trust Bank, and these are the rates available at 65% loan to value if they're a first-time buyer. HTB do not have any minimum values per unit, so they'll lend in this scenario. They don't have a minimum of 30 metres per square feet. Sorry, 30 metres per studio restriction either. So that would be my lender of choice. And if they've already got a credit profile in the UK and they're an overseas national, we can then get 75% with HTB. Yeah, that's my lender I would go to in this scenario.
That's brilliant. Thank you, Bruce, because that really shows that it really opens up the market and really opens up opportunities with those products there for the investor. I'd love to, Tim, I'd love to come to you and see if you've got any questions there regarding that, with regards to what Pavan's presented with deal one and what Bruce has just mentioned. Do you have any questions that you could maybe voice from an investor's perspective?
Yeah. Bruce, that's really, really useful. Thank you for that. A lot of my own portfolio is around the 75,000 mark, so it's a key sort of figure. How would you advise overseas nationals to be able to get a credit footprint in the UK? How do people start down that road?
Generally, we would get them a bridge on they generally start on a refurb product and go to Together Money. They'll lend to basically anybody at 75%. You just need to have a pulse with them, it seems like. And you would service that bridge for 3 months. And then after 3 months, we can exit them at 75%. If they are a first-time buyer and they're not doing a refurb, we really are capped at 65% on the first deal in the current marketplace.
Makes sense. Yeah, that's again really a smart way. Is anything like having a clear score or an Experian kind of account? Does that kind of help as well?
Yeah, that's per country. So Experian is a worldwide company and they sell their data onto the banks worldwide. Banks only really look in the jurisdiction they're lending at. So if they do have an Experian credit file overseas, something like that, it won't help. We need to be focusing on building up their credit profile over here.
Well, understood. I think that's everything from me at the moment. Thanks, Pavan.
Great, thank you, Tim. I actually have a question, Bruce, so I hope you don't mind. With regards to our overseas investors building up their portfolio, building their credit file, do these lenders have a preference on what they would lend to? So as an example, do they have a preference on strategies, on project types? So if I was an investor from overseas and I want to start out in HMOs, how are the investors going to respond to that? Is there a strategy that investors prefer, me as an overseas investor taking on?
Okay, so there's many different, you can rent properties out many different ways. We've mentioned a few here, guaranteed rent profile and stuff like that. Now, to access the best rates in the market, lenders want something very vanilla, very plain, very boring. So if you want to get involved with HMOs, they would want to have it fully tenanted already. They would want a management agent in place, and you're basically just taking over the HMO. And that allows you access to the best rates. Now, if you are a first-time investor or even second-time investor, and you're looking to change the tenant profile, shall we say there's ASTs there already, and you're going to guaranteed rent, or vice versa. So there's a change, yeah? If there's a change, it's difficult, very difficult to get 75% if you're a first-time buyer. It's possible at 75% if you are on your second deal. But on HMOs, keep it around about 65, 70%, and you won't be too far wrong.
Okay, brilliant. That's great. So really, in a nutshell, the more vanilla, as you put it, I love that. The more vanilla that the project or the deal is, the more likely the investor from overseas will have more lend to value,
More access to lenders, more rates, higher loan to values and stuff like that.
Perfect. That's brilliant. That's everything from me. I'm just going to check. Yeah, Q&A and chat box is all good. We're all up to speed. That's brilliant. Thank you, Bruce, for that. Really found that fascinating. Pavan, over to you with the second deal then, please.
So this deal is a mixed use. So it's a different strategy now. So on the ground floor, you can see that you have a retail unit, and on the side of the property and on the first floor, you have 3 2-bedroom apartments. So this purchase price is 525,000 and the gross yield is 7.2%. Now the rental income on this property, so the commercial unit is let at £1,300 per calendar month, and the 3 2-bedroom apartments are all fully let, which are £628 per calendar month. So altogether, that amounts up to £3,185, which is a great yield, and it's a mixed use property. So the ground floor retail unit is on a long lease, which is 8 years, and all the free 2-bedroom apartments are on ASTs, which also want to renew. So this is a turnkey investment right in front of the property. You have a tram station which goes directly into Birmingham city centre and Wolverhampton city centre, which takes approximately 15 minutes. It is also 5 minutes away from West Bromwich town centre. There's great amenities nearby, colleges, schools, and lots of workplaces. So it's good for families, professionals. Is there any questions for this property at all?
I've got a question. Oh, sorry, go on, Tim. Go for it.
Sorry. Who are the tenant types at the moment? Who's in the flats at the moment?
They're all professionals.
Okay, so like single professionals or?
They're all single professionals.
Okay, thanks.
Perfect. I just wanted to just to be clear, did you say that this is 2-bedroom apartments with the mixed use underneath?
Yes.
Okay, perfect. And is the mixed use included in the transaction?
Yes. So as you can see, this picture, as you can see, the retail unit on the ground floor and 2 doors. So one of the doors is 2 doors, which leads to 2 apartments, and 1 door leads to 1 apartment.
Wow. Okay, brilliant. So can you just explain what the benefit of a turnkey project is for those investors who may be new and may have not heard that terminology before, Pavan? If you can explain what that means and what the benefit is, please, that'd be wonderful.
Yes. So when investing in commercial units and they're on long leases, they are a tenant profile which are not going to leave for that time of the agreement. So this retail unit has an agreement for 8 years. So this tenant type is going to stay here for that amount of time. And, this is where it's secure for the investor, and where the free 2-bedroom apartments are. It's in a good location where it can also be for professionals, for either families as well. And this area is especially good for HMOs as well. So an investor can come in and also convert the free 2-bedroom apartments into a large HMO as well, because around in the area, I have a 6-bedroom HMO, which is also performing very well.
Brilliant. And you mentioned earlier about travel times into the local cities, and that's quite rapid. How far is it from the station if I had to walk or drive?
So literally across the road is the station. Yeah.
Oh wow. Okay. And so this is probably why the residential tenants are professionals, because they can commute so easily.
Yes.
Okay, brilliant, perfect. Tim, I think I saw you had your hand up. Is that correct, or for you?
Yes, thank you. I was almost going to put my own hand up. So Pavan, obviously with turnkey like this, the idea being that there's no work for the investor to do. Am I right in thinking there that it's basically cash flowing from day one?
Yes, that's correct.
With all the tenancy agreements, so that pretty much long assured tenancies throughout. And if it's right across the railroad, which is, as you say, it's perfect, it means the tenants are likely to stay for a long time because they're right, it's convenient for them. And then for the fact of going through, let's say, some kind of refinance or uplift of the property, I presume this is where a property such as this is more of a vanilla property for Bruce. So when the investors are looking to get lending on something like this, it'd be much easier to get a higher loan to value and easier to get the lending than if it was a mixed usage with a load of renovations to do in the flat or converting the commercial into the residential.
Yes. So, on the positive side, when Bruce is looking at it, the lenders will look at the how long the lease is, which is 8 years, and it's longer than 5 years, which basically makes it a secure investment, and that's what lenders are looking for.
Real. And then are any of these on guaranteed rent?
No, these ASTs are not on guaranteed rent. They're just on normal, traditional
okay, thanks.
agreements.
From a lending point of view, this is classed as semi-commercial, and it's lenders are loving this currently. They're sort of moving away from the high street 100% retail commercial because it got hit very hard by COVID. And they're loving multiple income streams coming in. So the commercial lenders are looking very favourable on semi-commercial. Now, they generally want the residential element to be worth more than the commercial element to make it qualify for semi-commercial, which this clearly does because it's the residential element is bigger than the commercial element. Lenders are also are only looking for 2 years left on a lease, so having 8 years really helps. And the valuation of this property will be, I don't know how it's come to 525, but the valuer will look at the vacant possession value of the commercial element and the bricks and mortar value of both the flats. And then he will do an aggregate valuation of all the elements to come up with the final figure. So the valuer will actually be breaking the units down bit by bit to come with his end value. Lender of choice would be HTB again for this. They have got the best rates in the market for semi-commercial. 65% shouldn't be a problem. If they've got at least one buy-to-let, it doesn't have to be an HMO, just one simple buy-to-let, I could probably push that to 75 as well. And it would help if the investor had some good income in the background as well, only because it's a semi-commercial property.
Thank you for that. Oh, sorry.
Rates, yeah, rates. I don't have a slide ready for HTB rates, but they would generally start with a 5 at 65%, and you're probably looking at about 5.5 at 75% on this property.
Brilliant. Thank you so much, Bruce. You actually answered one of my questions there, because with the lease being at 8 years, I was actually going to ask, from an investor's perspective, when they are looking at projects like this and trying to do due diligence, because sometimes when it's mixed use, it can be a little bit confusing. It can be a little bit more complex than your regular buy-to-lets or even a HMO. So when it's mixed use like this, how would you recommend that they break that down so that they can do the numbers on it before they decide, well, yes, I'm going to look at lending?
I would try and get hold of a set of floor plans, which has basically the square footage of all the units. And then I would just do some research and apply a pound per square foot valuation on it, because you're not going to get a yield-based valuation on secondary retail. You're only going to get a vacant possession valuation. So it will be the value of that commercial element per square foot if it was vacant. And then it's just the bricks and mortar values. What's the average house price per square foot in the area? And then from there, they can sort of do some good DD. Just keep it simple, stupid.
Perfect. That's brilliant. Thank you for that, Bruce. And then just with regards to the lease, actually on the commercial aspect there, where's the threshold where lenders will look at it and be like, oh, that's a little bit, because you mentioned something about 2 years, and obviously this has 8. Where's that precipice where lenders will have to really calculate, like, is this worth it? Where's that?
Generally, if it's less than 2 years, they'll just discount the commercial rent from their rental assessment calculation. So if the lease is less than 2 years, they'll just ignore the rent and they'll just do all the rental stress test on the 2 or 3 flats there. So to get up to 75%, we generally need all elements to be included. So yeah, 2 years is your killer point, basically.
Brilliant, brilliant. Thank you for that. I hope investors, you're getting a lot of value. These are real golden nuggets here that are being included today. So I hope you're enjoying it. If you do have any questions, please feel free to add your questions into the chat box and the Q&A. Thank you for that, Bruce. That was brilliant. Pavan, if you haven't got anything more to share on this one, then shall we proceed to the next?
Yes, sure. So yeah, so this property again is open to offers. It's part of a portfolio as well. You could probably see the other properties which are part of this property as well. So the landlord who is selling this is open to selling his property separate or part of a large portfolio, which consists of another commercial unit and another residential unit as well, which is all within the same area, and guaranteed rent can also be offered on these properties because there are hospitals nearby.
Sorry, Pavan, are you talking about the mixed use that you've just gone through, or are you talking about the next mixed use?
This mixed use.
Okay. Thanks.
Yeah.
Thanks.
So the next property we are going to go on is a 14-bedroom HMO. So this is a different strategy, and it's a student accommodation. So this 14-bedroom was developed by the developer 3 years ago, and now he is offloading. So this property is based in Newcastle upon Lyme, and the purchase price is £788,600. The gross yield is 11%. The illustrative ROI is 26.43%. As you can see from the pictures, it is good at a good standard, all the bedrooms and bathrooms and kitchens. So nearby, you have Staffordshire University, and you also have another university as well. So this property is all let out to students, and it is also available for professionals and social housing too.
Pavan, I have a quick question while you're just running through the slides on that. With the 14 rooms, do they have their own en suites?
Yes, all rooms have en suites.
Okay, brilliant. And they look rather big from the angle of the photographs. Are they quite large rooms?
Yes, all rooms are very large. You have a double bedroom that fits in all the rooms. So it's a corner property. So it originally used to be 2 properties, and the developer converted it into one large property.
Wow, brilliant.
So if an investor is looking at it to acquire the property, there will also be saving on stamp duty as well, because the properties are separate on land registry.
Could you
That's
just explain yeah, that's huge. Could you just explain to the investors that may not understand what you've just said, that why that would be stamp duty free?
So obviously the property, when the developer started developing it, used to be 2 separate properties, and obviously now the developer has developed it and made it all into a large 14-bed property. So on land registry, it's classed as two properties, not one property. So if you was buying this property at £788,600, the stamp duty would be a much higher cost of what it would be for 2 properties. So for that, I would need to look at what the stamp duty rates are for these 2 properties and get back to whoever are interested in this property.
Okay, brilliant. Thank you for that. Tim, did you have anything to say with regards to this at all?
Yeah, so am I correct in thinking then this is essentially one property but 2 titles? So it's
yes,
on land registry, 2 titles. So for the investors in my portfolio, I've got something that's the opposite. I've got one property that's got 2 flats in it. So it's basically one purchase, and I get 2 flats in that. However, this one is 2 properties that have been combined into one. So essentially, when you're purchasing, as I understand it, you're purchasing 2 properties essentially that are separately, but they're they come together. Is that right?
Yes, that's correct.
And then obviously with what you say with the stamp duty, there's a potential for, I presume, for the lower stamp duty because of, are there any COVID regulations still in place in terms of lower stamp duty threshold, or is that gone now?
I'm not sure of that, if that's gone or not. All I know is because it's on 2 titles, that's where you can save on the stamp duty.
Okay, bro, thanks. And then, I mean, it looks massive. So I suppose a quick one, how would you come across all these deals? Because obviously you've shown some really good deals here, all are off market. How is your network set up to get access to these?
So we not only source on behalf of our clients in the UK, we actually acquire a lot of stuff as well. So we're in the market and we're known as buyers. So people are always coming up to us saying, you know, would you like to buy this? Would you like to buy that? I have opportunity for you. And, you know, this is where we can offer our opportunities to our clients as well. You know, we don't buy every single property out there.
So I mean that's brilliant then. So basically the network you've created with your business, with everyone around you coming to you with the properties, that's incredibly valuable for being able to get the good deals, and that's where the value of a sourcer really comes into play, right?
Yeah, thanks.
Bro, awesome, thanks. That's everything from me at the moment.
That's great. Thank you, Tim. Bruce, I'd just like to bring you in because I was just curious as what you would recommend from a product here on a lending perspective with regards to a 14-bedroom HMO is quite large.
I call them lumpy HMOs, quite big. Okay, and the biggest HMO I've ever funded is 52 beds, which was pretty big. That too was student as well. Now, the conversation I probably have to have with Pavan here is quite a dull one, so apologies. It's bricks and mortar versus commercial yield-based valuations. Because you get C3 planning if it's a single dwelling, you get C4 planning if it's a multi-let up to 6. After 7 or more people, not rooms, the usage class would need sui generis planning on this. So we've got a choice of lenders we can use. We can go more down the commercial lenders who will do a commercial yield-based valuation on the property, or we can go with the more bricks and mortar valuations. And it generally depends what the bricks and mortar per square foot is in that area versus a commercial yield-based valuation. And that's where I would start the conversation with which lenders I would use. I can get 75% on this if they've got at least one HMO in the background. To qualify to get 75 on this, or even 65, because it is a lumpy HMO, I would need some credit profile and landlord experience, because it is quite large. It's a great property, but it's not what I call a vanilla HMO. It's more of a specialist investor would need to go for this property. But the numbers look great. Well done.
Yeah, it looks like a really great deal. I did have a question for you, Bruce, but it's absolutely evaded my mind as you were talking. I'm not sure if you've answered it already. But Tim's coming to save me. He's got his hand raised. So go ahead, Tim, while I think about what this is.
While you're trying to rack your brains, I've got one for Pavan in terms of the tenancy agreements. So is each room let individually to a different student, and do the students have guarantors, or the parents guarantors on their ASTs? How are you working there, and are they paying year round, or are they just paying in university term time?
So these rooms are let out on an individual basis to each student, and they all have guarantors. So the term is obviously the uni terms, not all year round. Okay,
so are they on? Are they sort of paying 10 months of the year then, in terms of people doing their calculations and things?
Yes. So the numbers that I've listed here are all based upon the 10 months. So obviously the gross rental annual income is £87,000 and £360, and the net, including the utilities and the management, comes down to £65,520.
Okay, yeah, bro, that makes sense. So for the for any investors listening who aren't aware, having a guarantor basically means that if for some reason the students aren't able to pay their rent, then the parents step in, and the parents are the ones that then pay the rent. So it means the landlord has protection from students, where potentially students will spend the money going out partying instead.
Yeah.
Beautiful, perfect. Thank you for that, Tim. I'm still racking my brain on my question. So, but I do have a question from Shane Kelly. So Shane has asked, for the commercial valuation on the HMO, how do you know what yield would be used to determine the value?
Okay, so I really wish I had my commercial HMO presentation to hand. I've got some lovely slides on that, but I'll try and do it verbally for you. So you need to look at other HMOs in the area and see what they sold for and work out what the market rent is in that local area. The problem with HMOs is that they're sometimes as rare as hen's teeth, because everybody wants to keep them because there's such good income generation. You get such good yields from them. So you're going to have to look at comparables in the area. Whatever the market rent is, divide it by the value, gives you your yield, and then you just apply that yield to what Pavan's got up here, which is 65,000.
Brilliant. Brilliant. Okay, that's that. Shane, just do let us know if I'm saying brilliant. Shane, let us know if that answers your question, please. I'd really love to hear from you with regards to that. And then just to bring back to the point, thank you for that, Bruce. That was really helpful. I'm just going to keep an eye on the chat box to see if that answers Shane's question or if he has anything further. Just with regards to what Tim mentioned there, Pavan, and the rent, you mentioned the rental income is, just over £65,500. And you mentioned that that's over 10 months. So really this is yielding, £6,500 a month, really, as a net project.
Yes.
Brilliant. Brilliant. Okay, perfect. And just to update you all, thank you. Shane says, yes, thanks. Very helpful. Okay, brilliant. That question, I'm not sure. I think maybe you answered it, Bruce. That's why it's gone out of my head. Thank you, gents. Pavan, over to you.
Yes. So whoever are interested in these properties that I've presented today, please go onto the platform and have a look at the area information, the property details, and do your own due diligence as well, and stack them up as well and do your own numbers. If there aren't any properties on the platform that I haven't got that you may be interested in, please get in contact with me, because we like investors and developers getting in contact with ourselves and see what their investment criteria is, and ourselves going out there to find you that investment property.
Thank you, Pavan. I do just want to touch upon that, because what Pavan's mentioned is really crucial. So he's at you saw his virtual window right at the beginning, and there are plenty of deals, and because of time frames we are able to only show a small portion of that. So please do have a look at Pavan's estate agency window and see what it is that you would like to reach out to him to. If you do reach out with any of our guests today, whether it be Pavan or Bruce, please do use, when you contact them, please do use hashtag DCL, which stands for Deal Clinic Live. So that's hashtag DCL. That allows us to know where you've come from, and that you found this valuable more than anything, so that we continue to learn and grow with what we're doing. I will be showing you how to access, how to actually get to both Pavan and Bruce via the platform. I have included in the chat box the link to register. So if you are an investor here, but you actually need to register to the platform to see the deals, please do that. It's sourcinginvestments.co.uk/investor-registration. So I'm actually going to feel free to still put in the chat box any questions that you have. I'm just going to show you now, ladies and gents who are live, and we do have quite a few that have jumped on board. I'm just going to show you my screen and actually how to get in touch once you've registered on the platform, how easy it is to actually get in touch with whether it be the power team or an agent themselves. So you can see here that this is bond finance. Obviously, you've heard lovely Bruce speak. So once you are in the power team, you would just find Bruce here. And we have a live chat button. Now, please do bear in mind that doesn't mean Bruce is just going to pop up in a little bubble and speak to you straight away. It does send Bruce an alert message to let him know that you have reached out to him, and he will be able to have a chat with you. Now, that conversation actually takes place in our Sync app. That's SINC. That's our Sync app, which is encrypted and secured conversations between yourself and whether it be the power team or the agent. So we really have done a lot of work here to make sure you are covered and to make sure that your conversations are secure. So clicking this live chat button will actually give you a little pop-up message that you're going to start a direct conversation with that person. Bruce, I'm not going to click that, otherwise you'll just have an empty conversation box from myself. Okay, and then again, when you head over and register to the platform, when you find the properties that you were looking for and you click on them, it will direct you to the agent themselves. Now, this is Pavan's landing page within the platform. As you can see, Capital Partner Group, you've got all his compliance there is all ticked. You've got the about of where he sources and the strategies that he specializes in. And if you want to have that conversation with Pavan as well, this will go to, again, that let you know that you're having a direct conversation with Pavan. Nothing major happens. Like I say, you press proceed and it will start the conversation, and you will be taken to a conversation thread there. And that's where you can start to have those conversations with either our investors, your power team members. There's even live chat buttons for us here at Sourcing Investments. Does anybody else have anything else to share? Oh, Tim's got his hand up. There we go. He's ready. He's ready on the go. Tim, please do go.
Poised and ready. Poised and ready. So actually, this leads really nicely into a couple of questions that I've got for Pavan. Pavan, you mentioned that you've got your own power team members with everything that you do. Obviously, you've got your four-step, four-pillar business model. Can investors firstly use any of their own power team, and can they also use the Sourcing Investments power team as well, or are they restricted to be using your guys that you have, so your solicitors and your accountants and things? You're muted, Pavan. Sorry, mate.
No, it's quite open. You know, they can use their own power teams or they can use my power teams. It's their choice. Brilliant.
That's a question I get quite a lot from investors coming onto the platform. It's obviously the power team tab is there, and that's on the left hand side of anyone's dashboard under power team. And people just sort of asking the question, they have to use certain power team members, but it's open for everyone who needs it. And then another quick question. This is a slightly this is more of your advice question here. With your Wolverhampton property number 24 that you started with at the very beginning, you spoke about the fact that you've got electric heaters and gas central heating in the property. What's the reason to have them both, and do you recommend one over the other?
So the reason for that was, so I basically purchased this property. I was going to build 3 apartments, but then I changed my mind and I just built a 1-dwelling house instead. So I changed it for, so the ground floor has got electric heating and the top floor has got gas heating. So let's say if I decide in the future if I want to convert it, I've got all the utilities there already, and I just need to do a minor refurb. Or if I want to sell it in the future for a planning uplift, I can say, look, all the work has already been done.
Well, yeah, that makes a lot of sense. I tell you what, the reason I'm asking, I invest in Scotland as well, and up in Scotland there's a lot more electric heating systems than down in England and Wales. And I'm going through a sort of weighing up the pros and cons of both at the moment. One of them being that obviously the energy prices are going sky high at the moment, and there's talk that actually electric heating might well be cheaper than gas central heating coming up in a year or two's time. With one or the other's different setup costs and things. For you, Bruce, is there anything that lenders do or don't agree with on that?
I'm seeing more and more lenders look at EPC ratings on the properties, and some lenders are actually offering cheaper products if you've got an EPC rating of C or above.
Okay.
So these energy performance certificates basically tell you how efficient your property is, and if it is coming at an E or a D, all properties in 2025 need a C rating. I've got lenders asking questions. How are they going to move it from a E, D to a C? They're asking it now. So just be aware, it's going to become more and more a topic as we get closer to 2025.
So presumably then the main issue that brings the energy rating down is electric heating over gas central heating, right? Okay. Okay.
Yeah.
Very useful. I think that's everything that I got, but super. Thank you guys. That's really great.
That's brilliant. Thank you, Tim. Bruce, have you got anything that you would love to add?
No, feel free to use me as a sounding board. Anybody reach out, ask me questions. I'm more than happy to answer them.
Brilliant. Thank you so much, Bruce. Pavan, have you got any final words for the investors here that are here present today, or even maybe watching on the replay?
Yeah, I'd like to say thank you for tuning in. And like I said, have a look through the properties and see if you're interested. If there are other properties and you have a different investment criteria, be sure to get in touch and I'll be happy to have a chat with you.
Brilliant. Thank you so much. And I'd just like to say, thank you to all of our panelists today for taking the time out to present here with us. There is just one last thing, Pavan, with regards to the initial property that you walked us through, the video property. That was quite an extensive refurb that you did. So clearly you have a lot of experience to deliver a high quality finish. Is there anything that you would say to an investor when whether they be starting out or are very seasoned in their journey, is there anything that you could give them as a nugget, as a little tip or a tool, that when they're looking at a project, what to look for to make your journey with them smoother, so that they have a really seamless, or as seamless as possible, journey towards the end product?
I would say if it's, you're starting out on your journey, just invest in the simple things. Just start from doing the standard renovations, and once you've learned about the standard renovations, then move on to the slightly bigger stuff, and then start learning about extensions, knocking down chimneys on the walls, and then move on to the bigger stuff, which is commercial conversions or HMOs. Once you got to know all the building work that's required and what you need to know that you need to do, then I would move on to the bigger stuff. So start small.
I 100% agree with you. That is top advice. You want to walk before you run.
Me too. I completely agree with that. Well said.
Yeah. Brilliant. And the reason that I ask is because obviously, as an investor, we look at those juicy deals that, the first thing that you showed, and we look and think, oh my God, I would love to get involved with that. But really, as you've all said, as I think we can all agree, we do really need to start to walk before we can run. And there are in order to do that, we need to crawl first. So I hope that analogy really helps our investors. And it is exciting to get involved in, but really you need to plant solid foundations in your investing journey, so that you mitigate as much risk and stress, so that you have as much peace of mind with the projects that you are working on, as well as you journey through your investment projects. Okay, gentlemen, I love hanging out with you here in this space. Thank you so much for everything, all your advice, all your time, and all the nuggets that you have literally bestowed upon our investors here today live, and also those that will watch us on replay. Again, if you have any questions, obviously, and you're watching it on replay, or you you didn't think of it at the time, feel free to connect with us and email them through at admin@sourcinginvestments.co.uk. Again, if you need to register the platform, please do, and then feel free to reach out to Pavan and Bruce using hashtag DCL, which is Deal Clinic Live. All right, everyone, thank you so much for joining. I really do appreciate your time. For the investors that have joined, thank you so much for watching live, and for those that you watch on replay. With that, I'm going to wish you all an amazing day. Take care. Bye.
Bye.
Thank you very much, guys. Cheers.